Across the United States, a quiet but powerful shift is happening inside boardrooms, factories, retail chains, and service companies. Insurance, something most people barely think about, is suddenly becoming one of the biggest expenses businesses face, and the cost increases aren't small. In many industries, insurance rates are rising at their fastest pace in decades. Coverage limits are tightening, deductibles are increasing, and companies that once treated insurance as a routine line item are now treating it as a strategic threat. This surge in insurance costs isn't just squeezing profits, it's reshaping how entire U.S. industries operate, hire, invest, and plan for the future. The question is, what's behind these rising costs? And how are businesses adapting? The first major reason is climate and weather risk. Over the past several years, storms, floods, wildfires, and extreme temperatures have become more frequent and more destructive. Insurers have paid out massive amounts in claims, especially in states like California, Florida, Texas, and Louisiana. To stay profitable, insurance companies are raising premiums sharply, not just for homeowners, but for commercial properties too. That means higher costs for warehouses, factories, restaurants, farms, data centers, and virtually every business with a physical footprint. Some companies are even struggling to get insured at all. In high-risk states, major insurers have reduced coverage, withdrawn certain policies, or left markets entirely. Businesses that rely on property insurance are being forced to find smaller, more expensive carriers or take on partial coverage. This lack of availability drives costs even higher and creates new operational risks. Another major driver is litigation. The U.S. has seen a surge in lawsuits across industries, from workplace liability to product safety to data breaches. Legal costs are skyrocketing. Jury awards in some states have grown dramatically. As a result, liability insurance has become much more expensive. Companies in healthcare, transportation, construction, and retail are being hit particularly hard. Insurers are raising premiums to protect themselves from large payouts, and those increases are flowing directly into business expenses. Cyber insurance is another area pushing costs upward. With cyber attacks becoming more common and more sophisticated, the risk to companies has grown. Hackers target everything from payroll systems to customer databases to supply chain software. Insurers are now writing far fewer policies, demanding stricter security standards, and raising premiums sharply. For many businesses, cyber insurance is no longer optional, it's essential. But the rising cost is forcing companies to rethink their digital strategies. Workers' compensation insurance is climbing too. Higher medical costs, a tighter labor market, and increased workplace claims have pushed rates up in many states. This hits industries with physical labor the hardest: manufacturing, logistics, agriculture, and construction. Companies that already struggle with labor shortages now have higher insurance expenses tied directly to their workforce. These rising insurance costs are not just hitting individual businesses, they're reshaping entire industries. Take the construction industry. Builders are delaying projects because insurance costs are eating into profit margins. Some companies are avoiding regions with higher natural disaster risk. Others are redesigning buildings, materials, and layouts to lower insurance premiums. The entire sector is shifting toward risk reduction before projects even break ground. In the retail and hospitality sectors, insurance costs are influencing location decisions. Businesses are avoiding certain states, neighborhoods, and properties simply because premiums are too high. Store openings are being redirected to lower-risk regions. In some cities, small businesses are closing because their insurance doubled or tripled in a single year. Rising insurance costs are now part of the equation when companies choose where to expand or where to retreat. The healthcare industry is feeling the pressure too. Medical malpractice insurance is rising again after years of stability. Hospitals, clinics, and private practices are passing those costs on to patients through higher service fees. Insurance-driven cost increases are indirectly fueling the rising price of healthcare across the country. Even the transportation industry is being reshaped. Commercial auto insurance rates have surged due to higher accident rates, more expensive vehicle repairs, and rising legal settlements. Trucking companies, delivery fleets, and ride services are struggling to manage costs. Some small carriers are shutting down because insurance is eating up more profit than fuel. Real estate is another industry facing massive shifts. Insurance availability now plays a major role in whether investors buy commercial properties. If insurance is too expensive or unavailable, the deal collapses. This affects office buildings, apartment complexes, industrial facilities, and retail centers. Whole regions of the country are becoming harder to insure, and that affects property values and business investment. But rising insurance costs are also changing how companies operate internally. Businesses are investing heavily in risk mitigation, things like security systems, flood prevention, fireproof materials, safer equipment, and more training for employees. They're redesigning workflows, updating infrastructure, and strengthening safety programs to qualify for lower premiums. Risk management has become a core part of business strategy, not just a compliance task. Some companies are even self-insuring, meaning they set aside their own funds instead of relying on traditional carriers. Large corporations with strong balance sheets are building internal insurance reserves to avoid paying high premiums. This gives them flexibility, but it also signals how severe the insurance landscape has become. Technology is becoming a key tool in managing insurance risk. Companies are using sensors, monitoring systems, AI detection tools, and predictive analytics to avoid accidents and reduce claims. Insurers reward this with lower premiums, so businesses are adopting more tech-driven safety solutions. In warehouses, sensors track forklift movement to prevent collisions. In manufacturing, equipment monitors detect failures before they become accidents. In healthcare, digital systems reduce medical errors. Insurance costs are shaping technology adoption more than most people realize. Looking ahead, rising insurance costs will continue to play a major role in how industries grow. Companies will expand into lower-risk regions, invest more in prevention, and redesign products and properties to minimize losses. Businesses that ignore the insurance landscape will struggle, while those that adapt will stay competitive. The bottom line is clear: insurance is no longer a background expense. It's becoming one of the most influential forces in the U.S. economy. And as climate risks, litigation pressures, and economic challenges continue to evolve, rising insurance costs won't just reshape balance sheets, they'll reshape entire industries.